Right now, the entire global AI revolution, modern defense systems, and the infrastructure powering tomorrow's technology are entirely bottlenecked by a single island and one specific company, TSMC. TSMC operates as the absolute sacred mountain of the region. This single entity props up the entire domestic economy while holding a near monopoly on the production of the world's most advanced semiconductor chips. Because every major tech company is forced to buy their advanced chips from Taiwan, the island is pulling in a massive influx of foreign capital. In 2025 alone, global tech demand drove a record-breaking trade surplus of $157.14 billion. This chart illustrates a massive macroeconomic anomaly. The soaring line represents that record $157 billion trade surplus coming in. Logically, selling all those US dollars to buy new Taiwan dollars to pay local workers should cause the domestic currency to surge. Instead, the second line, representing the value of the new Taiwan dollar, is plunging downward. The economy is pulling in record-breaking cash, yet its currency is getting weaker. This flowchart tracks where that cash actually goes. TSMC might rely on local water, power, and engineering talent, but over 70% of its shares are held by foreign institutional investors. The vast majority of the profits generated by this monopoly immediately leaves the country and flows right back into the hands of foreign capitalists. That leaves about 30. Right now, Taiwanese life insurance companies hold between $600 billion and $700 billion in US debt, dwarfing the reserves of Taiwan's own central bank, which only holds about $200 billion to $300 billion. Because these insurers hold hundreds of billions in US dollar assets, they need a strong dollar to make their balance sheets look solvent. When the new Taiwan dollar briefly surged by 15%, these funds suffered paper losses exceeding $100 billion. To prevent catastrophic insolvency, these massive institutional players are highly incentivized to keep the local currency weak against the dollar. Understanding how these global liquidity flows dictate the market is the exact boundary between losing money and preserving wealth. To master how capital moves and build an institutional-grade investment strategy, join the Stewardship Finance Academy Free Stock Investment Masterclass. The ultimate result of this financial system is a constant drain. The economic success of the local engineers effectively funds U.S. corporate and government debt, continually driving down the value of the domestic currency, pushing up local consumer prices, and eroding the purchasing power of the very citizens building the technology. But capital is only half the equation. The actual manufacturing infrastructure is also being extracted. When legendary investors like Warren Buffett abruptly sold off multi-billion-dollar positions in TSMC, they did so because the global supply chain is concentrated on a single, highly vulnerable island across the Pacific Ocean. To eliminate this vulnerability, the United States government introduced an aggressive strategy, threatening 100% tariffs on foreign manufactured semiconductor chips. If an imported chip costs $100, an additional $100 tariff immediately wipes out any commercial margin. Because TSMC's biggest clients are American, the company was forced to comply. They committed a massive $65 billion to build 10 advanced fabrication plants and 2 packaging facilities in Arizona. Along with the infrastructure, hundreds of top-tier technical experts are relocating their families to the US, triggering a massive brain drain. Relocating factories is only the first phase. The broader objective is to revive a domestic competitor. Through massive federal intervention, the US government took a $9 billion direct equity stake in Intel to forcefully reboot the company's struggling manufacturing turnaround. This bar chart displays the immediate results of aligning federal capital with poached engineering talent. Intel had been struggling with its flagship 18A manufacturing node, with yield rates sitting below 40%. After this massive intervention, Intel's process yields surged to an astonishing 85%, rapidly closing the technological gap with TSMC's industry-leading benchmarks. By leveraging subsidies to force relocation, Washington moved the physical core of advanced manufacturing back to American soil without firing a single shot. The global chip market is becoming more American-centric. As TSMC expands its US footprint, Intel's manufacturing capability is finally within striking distance of the industry leader. For the average retail investor, the consequence is severe. Those who remain passive observers to these macroeconomic shifts will simply watch their purchasing power slowly erode as market dynamics shift beneath them. You don't have to get caught on the wrong side of this wealth redistribution. Take control of your financial future by registering for the Stewardship Finance Academy free stock investment masterclass, where you will learn to build a disciplined strategy to navigate these macroeconomic shifts. Click the first link in the description to claim your free place. If you found value in this analysis, make sure to subscribe to Stewardship Finance Academy and turn on post notifications for actionable financial insights every week. In an era where entire nations can have their wealth and technological advantages systematically extracted by foreign capital, understanding how global liquidity moves is the only true defense for your personal financial future.